Hello guys, welcome to a brand new video. In this video guys, I want to show you a full trading strategy including all the rules that we need to cover. So this can be a long video, but you have to take time to learn it, but I'll try to be slow as possible so that everybody can understand. I will go over everything here, and I will also include some examples throughout the video explaining everything. So the first step that we need to understand in this trading strategy is to have all the rules here covered when you are making an analysis. This video was also requested by one of the members that he needed something that he can go over and do every day when he wakes up and do analysis for his own. So in this video, I want to cover everything that you can do every day if you want to make a signal for yourself, or maybe when you see something else in the market. So I will try to cover everything that we need to get started. And another thing before we move on is that you need to understand time frames. So the time frames let's do from the higher time frame. Higher time frame will be like this. We have the higher time frame on this side, and then we have the lower time frame on this side too. So if we have lower time frame on the side, that means on the higher time frame is where we are going to do the analysis. Okay, then on the lower time frame is where we are going to do our entries. Okay, so right now that we have covered these two here, so let's do the time frames on the higher time frame before we can look for the lower time frame entries. So let's say you're doing your analysis on the monthly. When you do your analysis on the monthly, that means your lower time frame will be, will be the daily. That means when you're doing the analysis on the monthly time frame, your entry should be on the daily. Okay, so let's move on and write everything down. So the weekly will be the 4 hours or the 30 hours. It will all depend if the market is showing you something that you need to get into the market. If not, then that means we have to avoid those kind of setup. And also, let me include the 2 hours because I use it to 2 hours. Okay, so we have covered the monthly, the weekly. Right now we have to cover the daily time frame. And then on the daily time frame, we are going to use the 1 hour or the 30 minutes. And lastly, even the 45 minutes, if you have that on your trading view. So right now that we have covered this 30 time frames here, that means on a daily, you are going to analyze on the daily, and then you are going to move on to the 1 hour and the 30 minutes or even the 45 minutes to look for an entry if the analysis on this time frame is clear. And then right now, let's move on to the 4 hours. On the 4 hours, we are going to use the 15 minutes, even the 5 minutes. Okay, so I think from here, even if you have analysis on the, let's say maybe the 1 hour, that means right now you are going to use the lower time frame for your 1 hour in the 1 minute, even the 3 minute, even the 5 minutes. Don't go above these time frames. Okay, so right now that we have everything from this side here, let's do something like this. Okay, higher time frame, you make analysis. If you make an analysis on the monthly, that means your entry will be on the daily. The daily, if you let's say right now, let me do something like this. If you have your monthly time frame analysis for, let's say you have a monthly analysis here, and then you move on to the daily, you make an entry. But do you know that you can still move on to this and then enter on the 1 hour? That means right now you made an entry for the monthly time frame, making an entry on the 1 hour. That means you are reducing the risk from this monthly time frame. But in that case, that means you are going to hold a trade for a longer period of time. you're going to hold that trade maybe for months and months or so. But for now, we are going to use mostly the daily, because this is where you are going to find most of the trade, and even the 4 hours, you are going to find most entries or maybe signals easily on these time frames. So right now that we understand these time frames from here, I need to show you something that you need to understand before we can move on to the full strategy. The only thing that you need in the higher time frame is this. When you want to analyze the market, okay, on the higher time frame, guys, what you need is you need an engulfing candle like this, or bearish, and then you will have a bullish candle here. Let's do something like this. So on this higher time frame, guys, you need the next candlestick. You need to catch the next candlestick. This is what we need in the higher time frame. We need to catch the next candlestick. And what I have noticed is that after every bullish engulfing candle, because this is a bullish engulfing candle, you will just put a line around here. Then when you move on to the lower time frame, this will be your entry area. So the higher time frame we analyze, and then in the lower time frame we are going to make an entry. Okay, right now we have this. I'll also explain what you are going to see after you see something like this in the lower time frame. But if you have been reading that book, then to make this kind of signals, it will be much easier for you to understand. I'll also include some patterns throughout when we move on with this video. And then from here, we need to catch this next candlestick. The candlestick will be looking like this. We need to catch this low of this candlestick right here. Okay, so that means in the higher time frame, when you analyze, you just have to find this, and then you put a line here, and then you move on to the lower time frame and monitor this level here. Okay, and another thing that you're going to see, if the market didn't let's say maybe if we see something like this on the next day, if we are on the daily, if we see something like this, a bearish candle here, that means this setup will be invalidated already, because we want to catch the next bullish candle. Okay, so this one is just a different strategy, but I don't think we can touch it on this video, because what you're going to see is this will be something different, because we are trying to catch this. So if the market is doing something like this, that means you will get stopped out in the lower time frame. And this time right now, we need to draw a zone around here, so that we can catch this confirmation candle. That's when we can move on to the lower time frame. But this video is not based on that. We need only the next bullish candle over here. I hope we understand each other right there, because we're going to touch a lot of things. So from here, because we already have this, in the lower time frame, you need something like this. The higher time frame is where I told you guys that we need the next bullish candle. We need to catch that. And then in the lower time frame, we are going to use supply and demand zones with confirmation candle. Okay, so that means this time here, we will be waiting for the market to confirm around here bullish. That's when we are going to enter the market in the lower time frame with proper risk management. So this is what you need only. So let's go over the rules again. So right now, because I gave you an intro to what we're going to do from the higher time frame and to the lower time frame. So right now, that means you understand the time frames and what we need in the higher time frame and to the lower time frame. So you don't have to worry, because I'm just going to show you some examples. So the first rule that we need to understand is the last level being broken. Okay, let me show you what I mean by that. So let's say right now we see a market like this, like this, like this, like this, like this. So from here, in a bearish trend, guys, in a bearish trend, the last high must be broken first before we can see a bullish move. Yes, like this, guys. In a bearish trend, we have to see the last high being broken first before we can see a bullish move. So that means in this kind of scenario, we have to wait for the last high, which is this one, to be broken. And in the market, it won't be this clear, but you'll understand how to see things a little bit clear. So from here, you have to wait for the market to break this high. If the market keeps on doing something like this, that means right now our high is this one. Then we have to wait for the market to break this high here. Okay, then is when we can look for a bullish trend. The same thing applies to the bearish market. It will be the same, but let me just do it for the sake of teaching. We will have something like this. You can see we have high and a low. That means for now, we are not looking to enter the market. We just wait for this low to be broken, this one. Then if not, that means our new low is this one. As long if the market keeps going higher like this, we will have new lows, new lows, new lows. Okay, then the moment we see something like this breaking to the downside, that's when we can look to sell into the market. But if not, then that means we're going to avoid that. Okay, so let's look at another rule, which is right now another rule is a bullish or a bearish trend line being broken. Okay, this is the second rule right now, because right now we have already covered the last level being broken. So right now we need a bullish or a bearish trend, line to be broken first, and then we also need to see an impulse and a correction. Let me show you. This is the step one, where we have to see the last low being broken first. Right now we have to see this last low broken here, and then the next step is to see if the market has broken the bullish or a bearish trend line. In this case, we can see that we have a bullish trend. That means we have to do this. Okay, right now we have a bullish trend which is broken. We can also make our chart a little bit clean. Okay, and right now, because we have this, we are going to find what you call an impulse. So that means this move right here, it has to be a little bit fast. That means it has to be strong, like it has to move aggressively. That means it must not go down like this, because if it goes down like this, that means the market still has a potential to shoot higher. So from here, guys, we need to see let's see impulse and correction. Right now we have to find supply and demand zone, plus a fib extension for target, and support and resistance, and wave patterns. So right now we need to see support or resistance. You can put your levels right there, like this, or maybe we can do something like this. Okay, then we can put the levels here, and here. You can also name your chart so that everything can be list clean, but I'll try to show you some examples when we move on with this video. Here we have our support level here. We have our support in this area, and then we have our resistance level here. So after doing something like this, okay, this move here, you see this move here, this impulsive move here, in the higher time frame, you will see something like this. In the higher time frame, with only just two candlesticks, then this is going to be bullish. So in the higher time frame, this will be your higher time frame. Okay, this will be your higher time frame, and then this will be your lower time frame. So in the higher time frame, you are just going to put a line around here. Then when you move on to the lower time frame, you have to see this kind of pattern here. I'll also show you some other patterns that you need to understand, but it's not a big deal, so it's not even that hard. So let's say maybe you are on the daily here. Just put a line here when you see a bearish engulfing candle. Then when you move on to the lower time frame, you will see something like this. So the next step here, guys, this line here in the lower time frame, it can be around here. Okay, even if when you have a resistance like this, then in the lower time frame, you will predict that the market is going to correct like this and then touch here. So when the market touch here, you have to find a zone in this side. then is when you can look to go short. Then from here, guys, I think everything is just clear, but let me just do it. Like, you will have something like this. This is your correction right now. Even if when you see a resistance like this, let's say maybe this line here is around this area, that means you still have to find a zone around here. So just wait for the market to touch this line, and then if you have a zone here, you just enter the market and then sell. And another thing that we need to cover before we move on is that let's say maybe let me show you a couple of structures here, guys. Let's say maybe sometimes it can be like this. You have a move, like a very strong aggressive move to the downside, and then the market moves higher. It starts to correct like this, it moves lower like this. Okay, then you have your correction like this, then it moves higher again, start to correct like this. So in the higher time frame, let's say maybe this is the 4 hours here. This is your 4 hours impulsive wave. Then in this lower time frame, you just need to find a zone around this area. Then you're going to look to go long here. Okay, guys. So in this case, when you see something like this, that means right now you have a bullish trend. Like maybe the market is trying to correct even longer. Let's say maybe it is making something like this. Yeah, maybe let's say the market is making something like this, a correction like this, before it can shoot lower from here. Okay, and some patterns will look something like this. Let me show you another pattern that you're going to find more. The market will move higher, it will start to correct around here and then drop lower. So that means right now we have to wait for the support and resistance level, and then wait for a correction around here and then drop lower. The market will be looking as if like it's moving higher, but this kind of pattern, you will realize that you will see it more. And also the higher time frame line should also be touched, because we are trying to catch the next candle. Okay, so I think this is what we are going to do mostly throughout this video. And another pattern will look something like this. It will be in this kind of form. It will be like this, like this. It will be like this. So when you see something like this, when you are analyzing in the market, you will see this kind of pattern most of the time. So from here, guys, let's say maybe you are on the 1 hour time frame and you see something like this, and then suddenly there's this move here, this kind of move, this aggressive move here. So when you move on to the daily time frame, you have to see an engulfing candle, or maybe you can use the daily or even the 12 hours time frame. It has to represent a bearish engulfing candle. So on the next candle in the lower time frame, you have to see this, a correction like this, and sometimes it can even retrace back to this previous high here. So from here, when you try to catch the next candlestick, that means you have to find a zone around here. And also another thing that you need to see is the market has to also touch that previous candle. What I mean is that, let me do it again so that everything can be clear. We have a bullish candle here, and then we have a bearish candle over here. So in this case, the market has to touch this line here, and this line will be this one, will be this line here. So when the market is moving on the next candle, you have to see something like this in the lower time frame, a correction in the lower time frame. Okay, so for now, I think I have covered most of the things, if I'm not mistaken. But if I'm mistaken, then that means this video has to be redone again, or maybe I'll just add more information, because this is just an introduction or maybe a full strategy or so, but we have to cover everything. And I think I have covered everything so far. Let me see, did I miss something? Oh, I think I missed something. So from here, when you see this, this move again, you have to see another engulfing candle here. Then let's say maybe the market did something like this aggressively, and also don't forget your support and resistance levels. You will have to wait for the market to print out a correction again and also find a zone. So let's say you are on the daily time frame from this area here. So that means your target has to be a little bit longer, and we are going to use the Fibonacci extension, which is this one. You are going to put on the high, the low, and draw as if like you're drawing a trend line like this. Let me increase the opacity of this. It will be something like this. Start from the high to the low, and then you draw as if like you're drawing a trend line. Then your take profit will be this one here. So I think from here I have covered like most of the things that is needed to get started. And also this is what you need to do on a daily basis. I'll just show you the rules and everything when we move forward with this video, because this is going to be a long video so far. I can just notice it because I'm just relaxed to just go over everything without scripting anything. So from here I think we can move on to a chart. I think I'll represent. I'll just do the gold, because I can see that we can have like more setups that we can study. Okay, so let's move on. Where should I start from here? I think I'll start from this level here. Okay, so let's continue from here. Before we move on to the first example, I want to point out some of the things that you need to focus on when you are on the higher time frame. So on the higher time frame, you have to find a bearish or a bullish engulfing candle. Then you will put on the step 2, you need to put a horizontal line on the previous candle like this, guys. This will be the bullish candle. Then if you see a bearish engulfing candle like this, that means you're going to put that line here. Okay, so from here, then when you move on to the lower time frame, you have to find support and resistance level being broken, and you have to find impulse and corrections. You have to check that out too. Find a zone near the higher time frame horizontal line, which is this one here. This will be linked. You have to check that too. Also check if the market has broken the trend line. You have to check that too. If the correction is complete, put a fib extension for target. Have to check that too, but sometimes you will see that the market is trying to build the correction. And then when you have all of these things, wait for price section to touch the higher time frame horizontal line. Then also check if the market entered this lower time frame zone without invalidating it. Also check that too. When the market confirms everything above here, that's when you will decide when to enter. And then when you have that zone, for example purposes, let me show you in the side. You will have a trend line being broken. This is your trend line. You will have a market like this. Then you will find a correction here. You will find that zone around this level here. That's when you have to confirm the market around this area and then trade higher. This is just for example purposes, guys. So I'll just demonstrate everything to you when we move on. So your trade setup will look something like this. We have a trend line, okay, and then we have a trend line like this. This will be easy, don't worry. And then you have a trend like this. Okay, when you have something like this, this will be your lower time frame analysis. Let me just write it down so everything can be clear. This will be your lower time frame analysis. Let's check everything. We have a bearish trend line being broken here. We have to check that out. We have our support and resistance here. We have something like this. Then we can also put some let me do something like this because I want it to be clear. Yeah, it will be something like this one, guys. Then from here you will see resistance. We have a resistance here, and then we have a support over here. We have a support this side. Okay, And then let's say maybe we have you can also mention this one here and say a higher time frame horizontal line. You can do something like this, higher time frame horizontal line over here. So when you see something like this, that means right now you have to find a zone around this area here, below this line here. So we will have a lower time frame zone like this. Let me say zone 2. So when the market touch this level here, you will have this kind of pattern mostly, and then this is your correction. You have to wait for the market to touch here, find a zone around this area, and check box. We have also an impulse here and a correction over here. Then that means when the market comes to this level here, you have to wait for a confirmation candle around this area, and then you trade higher. And it's also possible to enter around these areas here, but this video is not based on that. This video is just based on someone who's trying to make his or her own signals easily. But you will also understand when we move on, because this is going to be a long video so far. So then from here, guys, what you need is that you will draw your correction here, and then you will use your Fibonacci extension for target. You will do from the low to the high, and then to the end of you can just put it even here or here, it doesn't even matter, because take profit is just something that is subjective anyway. And then from here, when you enter the market around this area, it will be something like this. You will enter here and then stop loss below. Your first take profit is on the 0.618 of Fibonacci, and then the second one will be on the 1% here, and then the third one will be here on the 1.272. So that means when you are making analysis, it will be in this kind of form here. Okay, I hope everybody understands this kind of thing here. And before we move on, let me show you. This is the kind of things that I am talking about here. As you see, broken bullish trend, support and resistance over here. Let me zoom in a little bit. Okay, you will have something like this. So in this case, we can also see that we have a zone here. So that means you will enter around here, and then your take profit will be here and here. Okay, and if you check this book, guys, it will demonstrate everything to you. So even though if you missed this one here, this entry here, you can still re-enter again. As you can see, this line here, let me show you again. Let me do this. As you can see from here, the market, I made a line here because the market didn't break this low. So that means the market can still push lower, come back, and there's still another zone over here. You can enter with it, targeting this and this. So if you watch that, if you read that book clearly, you will find more examples like this. As you can see, it has the first take profit. Even this one, there was a correction over here, some couple of more zones here, and there's some entries around here. As you can see, there's always a line here because I am looking for the market like to break this low here, to break this low. You will see there's more examples like this inside this book. If you go and read it, you'll understand even more. So even here, there's a zone here, I remember, even in this one. And sometimes, as you can see here, guys, this line here, this is just a correction. The market breaks it and come and retest this zone, and then you trade lower. These moves here were made because of engulfing candles. So if you go and check this kind of examples inside the book, you will understand how to make your chart a little bit simple. And I made this book a very long time ago. That was a very long time ago. It was in 2019, and some of the things are from 2018, but I decided to compile it. Okay, so let's move on, guys, to more examples. I'm going to remove everything, and then we are going to find the first example. Let's do this one here. It looks like something that can be difficult. Let's say you are looking at the market like this one here. You see a bullish candle here. Okay, you see a bullish candle here, and then followed by a bearish candle over here. The next step that you need to do, guys, is to catch this candlestick here. and sometimes you can catch it, but it will close bullish. So that means in this higher time frame, we are on the daily, you will put a horizontal line here. Okay, that means you are trying to catch the next candlestick. So let's try to put a horizontal line there and see where we are going. Okay, let's put the horizontal line here. We have a horizontal line over here. I'll just monitor this high here because I'm lazy to rewind right now, but it's fine. Let's move on to the time frames that I have been talking about, because we are on the daily. We can use the 1 hour, the 45 minutes, and even the 30 minutes. So let's move on to the lower time frame. Let's try the 1 hour maybe. I hope that data is still available in that area. Okay, still available. So as we can see from here, guys, in the higher time frame, this is the line that I'm talking about here. This is the daily horizontal line here. Okay, we have a daily horizontal line over here. So as you can see, price shoot higher, and then there's no, even if like you used this zone over here, and then you have a bullish trend being broken, you have a correction that was building up over here. So, and also you have a move which is impulsive. You have a trend line that is being broken. You have a correction. You have a zone over here. So that means in this lower time frame, you will be waiting for the market like to close bearish without even invalidating this high here. And we are on the 1 hour, okay? But we will also move on to the lower time frame and see if we can find something valid. And also, if I zoom in clearly around this area, there's an entry. Okay, let me zoom in and show you, but we'll also try the 30 minutes and the 45 minutes. I'll just remove this one for now. You have to like think out of the box, guys, when you are doing something like this. But it's not that difficult to make, because this line here will show you where to look for those zones to sell. Because we can clearly see that in this one, the market touched this daily horizontal line. So you will be waiting for the market to close bearish without even touching this high here. And we can see that the market on this candle broke to the upside and then closed bearish. So that means this zone here, this supply zone here is invalidated. So from here, guys, we can do something like this. We can read this price action in this next section here. So because we already know that, okay, this one is invalidated, we can still delete it and say the market manipulated this high, okay? And then we will find another zone in this section. So let's try to find another zone here. You can see that we have a zone here. And this zone is starting from this candle. So from this candlestick here, we will do something like this. We have another demand zone. We have a bearish candle. That means right now we have to see a bullish candle before a bearish candle. And then we have a bullish candle. Price never traded above the zone, and then it closed bearish. So this candlestick here that is closing bearish is not a bearish engulfing candle. So that means you can try to enter and put your sell limit order around here, even though it was not triggered. But entering here, I don't like it, unless if the candlestick is very small. And then you will, maybe you can try to enter at the retracement and then your stop loss above here. I hope you understand that. But if you keep practicing, you will understand what I am talking about here easily. So, oh, and another thing that I forgot to mention is the take profit. You will use your Fibonacci extension from the high to the low to around here or even here. It doesn't even matter. So that means right now your take profit will be this one over here and even this one here. So you can see if I increase it, that means this one will be touched, this one here will be touched, but it just depends. I'll just remove it like this. Let's see if the market, I think we could have been stopped out on break even on the next trade, because the take profit one is hit, even though the market dropped lower, because this is just a bigger correction over here. So let's move on to the 30 minutes of the 45 minutes. Let's see the 45 in this area. I hope that data will load. Even on the 45 minutes, we still have the same thing, but this one is kind of different right now because that zone is here. We still have that correction over here, and then when this candlestick, this candlestick here is the one that touched the zone and closed bearish. That means this one is a confirmation candle. So if you are trying to enter the market, like trying to sniper it around here, that means you could have easily missed this entry here. So even though if you missed it, like as I said before, the market likes to come and break this low, come back again, and you can see we still have a zone here. You can still try to enter here because your analysis is from this area and your take profit is still valid. It was not hit. So let's try to find more examples. Or before I move on, let's check out the 30 minutes. Let's check out the 30 minutes right now. Maybe we can find something. Because we can see clearly that the 1 hour is kind of risky. The 45 minutes is a little bit better. Will I have data from here? Yes, I do. So in this time frame, we can see that there is no entry even in this area. But another thing that we can do, we can see that we have a zone above here. And then if we draw our zone like this, that means right now, if what am I saying right now, bro? As you can see, even if I tried to draw the zone like this, the market never touched the zone. So that means no entry from this zone, but the market made another zone here, and then it confirmed bearish with this candlestick. And let's see even if this one was touched too. Yeah, this one could have been easily a good trade around here. Let's see. This one will be valid too. We have an entry around here. We have an entry here with this bearish candle, and even here we still have a zone. We can see that we have to see a bullish candle before a bearish candle is this one, and then we have this candlestick which touched the zone and closed bearish. So that means this one could have been easily a sniper entry. Let me zoom in and show you guys. You have to think out of the box. As you can see, we moved from the 1 hour to the 45 minutes and then to the 30 minutes. But right now we are looking at price action, looking only for the bearish trend only, because we already know that the market has touched the daily horizontal line was touched. So that means we have to look for a sell setups only. So from here we can clearly see that we have this zone. This is our bullish candle before a bearish candle. From here we have this candlestick. Then right now we have to wait for the market to touch the zone, which it did, and then the market closed bearish with this candlestick here. So if it closed bearish like this, you can put your sell limit order around here and then stop loss above. That's how you should do it in the lower time frame. You have to be very smart about it. Think very quickly. I know some of you will take 5 months to learn everything to the core, but some of you guys will understand this very easily. You don't have to stress about it because we don't learn the same things quickly. And don't have to rush, guys. There's no need to rush. We sell here, stop loss around here, including the spread, because you're on the 30 minutes. Your take profit will still be the same one from the Fibonacci extension, like this. Okay, it will be something like this. Okay, so I think I am done with this example here. So let's try to move on to let's try the 4 hours. Let's do it. Maybe the 4 hours, because I'm doing this example on gold. Okay, yeah, in this example here, you can see this is the current price action of gold. You can just put your horizontal line around here, and then you will move on to the 5 minutes, and already you can see the market touched that level already, and the market is trying to push lower from here. So it will be something like this. You will say you have a ending diagonal or something, yeah, like that one, and then you have a correction here, and we can see everything is not clear. Let's move on to the 30 minutes. The market touched here. We still have a correction. Let me try the 1 minute. Yeah, on the 1 minute is kind of clean. So when you have something like this, guys, on the lower time frame, you have to wait for the market to touch this level here. And then we can see that the market touched this level. So what you need to do right now is draw the zones. And I think the first trade could have easily stopped you out. If you were using this correction over here, you tried to enter with this one, this move could have easily stopped you out. But we know that we're still looking to sell. And then we have another zone in this side again, move. And then you can try to enter with this candlestick here. But if you are trying to sniper it, that means your sell limit order will be around here. Maybe it could have been triggered around here. Let me see if it was triggered. Or maybe you can put your sell limit order above this candle. Could have been easily been triggered. And then your take profit should be, we start from here, from the high. And then your take profit is here. And then the second one is here. That's how you must do it. But this was just a quick example to demonstrate. And then let's move on to the 4 hours because I want to find more examples. I'll try to cut this video because right now I can see that I'm on 1 hour recording this video. So let's find another example. Let's find any. Okay, I see something over here. We have a bearish engulfing candle on the. We have a bearish engulfing candle here on the 4 hours. So that means, remember guys, that means our time frames to the lower time frame will be the 15 minutes, the 5 minute, the 3 minute, and even the 1. That's what we need in this higher time frame. So let's try to move on to the lower time frame and see what happened over here, because we're just trying to study and make this analysis even better. So we have this. I'll also mark this high here for in case. Let's try the but I think I'll move on to the 5 minutes instantly. It's around this area. Let's see. I'll remove this one. Right now, let's find a trend line that is broken. We can see. And another thing, let's find if the moves are very impulsive or corrective. We can see that these moves going down are very strong. So the next step is to wait for the market to correct here. And also, we have to see that we have a resistance, we have a support area, and then we have a resistance area. So what we need next is that we need a correction. We can see that we have a correction. Let me remove some of the things. I'll make this chart a little bit clean. We have a correction. So you will be expecting the market to touch this higher time frame line and then drop lower. And like as I said before, you can put a line here. And we can see that the market didn't break this line first. It moved lower, made this correction bigger, and then came and touched this zone and then dropped lower. But if we move on to the lower time frame, I think we can find a zone here, but we'll just see. So we have a correction over here, and then we will use a Fibonacci tool. That means your take profit is this one and even this one over here. Okay, so let's move on to, because I can see that in this time frame we have a confirmation candle here, which is a bearish engulfing candle, and the market never came and tested this here. It missed. So that means in this kind of situations I won't even take a trade. So let's move on to because we're on the 5 minutes, let's move on to the 3 minutes and see if we can find something to identify. I'll just remove the take profit level. There's nothing in this time frame too. What's happening, guys? There's nothing here. So what I mean, like we see this horizontal line on the lower time frame that we did on the higher time frame. We have to find a zone around this area or after it has been touched. Okay, so let's move on to the is there a 2 minutes time frame? Yeah, I think so. I think I have it. Even if you drew the zone, the market never touched it here. Even in the side, let's try the 1 minute right now because this is the last option. Let's try the 1 minute and see if there's something that is gonna pop. This one, yeah, this one is nice. Let's look. You have to find a zone around this level here. Let me remove this one here. We have a zone, this one here. Let's see if it moved according to order. Okay, we have the zone. You see, right now we have to find a zone after the market has touched this higher time frame. Let me just do it. So right now that we have this higher time frame line, and then we have a supply zone on the 1 minute. We have a 1 minute supply zone over here, and then right now we have to wait for the market to touch this level here without even invalidating it. So in this case, we can see that the market touched here and then closed bearish. So you can still enter this one because we are on the 1 minute. You'll put your sell position maybe above or anywhere you like, or maybe in this high, the small high here, and then your stop loss above, like let's say around here. So you can see right now that we are on the correction. Your price action will be like this, and then let's put that that Fibonacci extension again, but this time it will be a little bit different from here and then to here, and then you'll just hold the trade. 1:25 is not that bad at all. So from here you can see that it's the same. Let me remove this, guys. Let me remove this. From here, guys, you can see that it's the same thing. As you can see, this line here in the higher time frame will just show you that the correction is still starting. So just wait for a moment, okay? And this will also confirm that your trend is broken, and then this will give you your take profit, and then these zones will give you an entry, okay? So I think guys, I'll end this video right here, then I'll do a part 2 and upload it again. So right now I'm just going to edit this one and then do another one like today maybe, because I feel like I'm tired right now and I don't want to mess everything up. So let's just cancel everything here, and then we can move on to more examples. Then I'll do a part 2. And also, if you don't understand this video, guys, please tell me before the end of the day so that I can provide more information throughout this video. Okay, I guess I'll see you on the next video. Okay.